Hey guys, welcome back to the Capital Mindset Show. We're your hosts, Austin and Fabio. And today we are kind of revisiting some of our earlier assumptions about Corsair, ticker symbol CRSR. Maybe some things have changed. We're just going to be taking a look at some of the assumptions we made in terms of cash flow growth rates, as well as plugging it back into the DCF model, just sort of seeing what's there. And then also too, sort of exploring if our position prices, which means that the prices that we would be willing to buy into and potentially make Corsair a position of ours, if our position prices have changed or not. So Fabio, without further ado, what are we looking at here today?
So you already said it. We're looking at Corsair again. We're kind of revisiting to seeing if our opinions have changed. So I'll go real quick first, and then we'll ask Austin. So for me personally, not much has changed. We talked about in our previous video. Go on our channel and you can see the video we made about a month ago about why the price isn't moving. And surprised that the price hasn't really moved since then. So a lot of things we're looking for kind of extends out to 2024 regarding some of the covenants, some of the restrictions with Eagle Tree Capital. We discussed about what our thoughts on Eagle Tree Capital and how they may differ from other creators. We discussed that, we think the business is a good business, not what I call a fantastic business or an S tier business, but it's nothing close to like an F.
Yeah.
Right. It's so far from an F. Right. But it's not that S tier business. So my assumptions are kind of the same. So I will be adding, or I will be not adding because I don't have a position yet, but I will be buying Corsair stock or starting a position at about $23 and then making it into a decently sized, not decently sized, but moderately kind of minuscule sized position below 20, and then approaching closer towards the heavy adding if it were to reach like the mid to low teens. So below 15, that would be the price at which I would be comfortable with making it a reasonable position. Will it ever get there? Probably not. So it might not ever end up being a position in my portfolio. Who knows? So what I'm just saying with that is my price targets haven't really changed. If we're going to pull open the DCF to just show everyone the model, these are kind of the initial assumptions. So if I require a 20% rate of return, I would need to assume pretty high growth rates going forward. I think 30% and above, or 25% I think might work. And then I think I can assume maybe 24.
Yeah.
And let's say 22. So I'll say 22. I can assume 22% going forward. And that might be aggressive. That might not be that aggressive. I would say I would lean on the more aggressive side of estimations. But where an individual, the viewer watching, where you have to concentrate your research going forward, because to supplement our videos, right? So for your own research, where I recommend to go kind of look deep and truly understand is how do you see the PC component market going, not just the video game, because you got to separate them. Because in the video game components, you have the digital games themselves, and then you have the component side. So you got to focus and segregate the games themselves from the components. And Corsair themselves tells you this in their risks, because you have stuff like cloud gaming that's coming in. And if cloud gaming becomes a big part, those risks, but we'd address those more in our other videos. But those are the things you have to really go and look deeper. And then from there, change your different assumptions going forward. For me personally, again, I would lean more towards on saying it's probably going to be less. So if I put like a non-aggressive, like 15%, and let's make it
10%.
Yeah, 10%. Yeah. So you can kind of see that's where I came up with my price targets, that if the opportunity presented itself, I would be comfortable buying at those prices. I'd be very comfortable, because I can reasonably presume from what I know that Corsair can achieve those numbers. And then I would be achieving my required rate of return of 20%. So Austin,
yes.
I want to know yours.
I'm actually kind of curious now, maybe for some of our newer viewers here, you might define what you mean when you say price target, because we're not talking about where we think the stock will go to. What we define a price target as is more so if the stock gets to this price, then we may or may not open a position in this. So Fabio, would you kind of explain your mentality behind that a little bit for maybe some of our newer viewers? And then also too, what you just saw here where Fabio was kind of changing around some growth rates, sort of getting more conservative with his estimations going forward. That basically is what we at Capital Mindset like to call having a margin of safety inside of our growth and cash flows. So let's say that I believed with Corsair that Corsair could grow their cash flows over the next 10 years by 20%. I would still use 10% as my like upper threshold. Let's say for the sake of this example, I would still use 10% as my upper threshold, because then that gives me a 100% margin of safety should my assumptions prove to be incorrect about where Corsair could potentially go to. So
let me add to that so the audience can understand that a little bit. What Austin is saying there is he's adding his uncertainty. Okay. So if you're not uncertain, you don't have to do that. But he's telling you he's very uncertain about that 20% growth rate. All right. So everyone can, it depends on the person or the investor, what their thresholds are going to be. So Austin could have done that in the required rate of return. He could have expressed that margin of safety, or he can express that margin of safety and decreasing those growth rates. So if he says his upper threshold is 10%, he's applying a huge margin of safety because he's reflecting an uncertainty he has over the stock, which basically means for those of you who find yourself in the same boat, this stock is probably not for you. Unless it gets to that price, in which case, so for example, if it got to $12.65, Austin would be like, this is the deal of a lifetime, because I was very conservative with this company, and it's given me the opportunity, and given that the fundamentals haven't changed. So because the market might be reflecting that because the fundamentals have drastically changed, but sometimes the market will hand you a fantastic investment when all the ducks line up in a row and you can just claim it. So with that being said, what Austin was kind of talking about is we don't have to put up price targets, and what we're doing is not putting up price targets. So we're not making predictions on price movement. And that's actually the job of analysts, which is a very stressful job. As portfolio managers, we don't have to set up a target price. All we have to do is figure out a price we're comfortable with adding to, and a price we're comfortable with selling at. Price targets are predictions between 12 months or less or more. And that is kind of, it's a very difficult job, very difficult thing to do, and something we're not going to be doing here. So you're not going to see us giving price targets, because that's simply not the case. Anyway, if you want to be a portfolio manager, that's not at all what you do as a portfolio manager. You don't do that. You allocate capital and you decide at what price you enter and what price you exit. You're not caring about, oh, what is it going to do in the next 12 months? It has to get to this target. If it doesn't get to this target, I'm wrong. No, that's not at all. If you're maybe like a hedge fund, you have to worry about the short-termisms of the market. But if you're your private owned investor, why would you care? All right. You can take a longer term horizon, right? You have that advantage. Don't take away that advantage from yourself. All right. So
another thing that I also want to add onto this too, is that sometimes there might be a misunderstanding with what you're looking at here. I'm not saying the price is going to go to $12.65. In my personal opinion, I think the price will never hit anywhere near that, just being honest. But then again, I also don't know. It could not. We're not saying that it will go to $12. What hypothetically I would be saying, because my buy price hasn't changed. If it goes to 23, then I will open a position in Corsair. But just for the sake of a hypothetical, if the price were to go to $12.65 a share, I would be buying hand over fist, because that would satisfy my assumptions I placed onto the stock, and it satisfies my margin of safety in regards to Corsair itself. Because I see, Fabio, a lot of misinformation with sometimes some people thinking that, oh, we're saying the price is going to go down to $12, and that's not what we're saying at all. In fact, there's no way, like we could never sit here and say, like Fabio was saying, where the price could or could not go to. But what we can say is what prices we would be comfortable buying in that satisfy our assumptions. So hopefully that was a good side note to add on to that too, Fabio. So.
Yeah, correct. Yeah, that's basically what you can take away from that part of the video, or this part of the video. But yeah, nothing's really changed for Corsair. Again, if it reaches 23, I'll be adding it to my portfolio, but just a tiny little sliver, like a watch position. And then if it were to continue a downtrend, I would continuously add and then begin to add heavy below $15. And at $15 and below, assuming the fundamentals have not changed, this position could become something reasonable, close to like 5 to 10% of my portfolio. But that the reason why, and let me be very clear, the reason why I require such a high discount is a lot of the things we outlined in the previous video. For me, for a company to make it into my portfolio, it has to demonstrate that it's a fantastic business, that it has something with staying power, that there's something about the business that cannot be replicated. For Corsair, it has not demonstrated this to me. It hasn't demonstrated that it's a terrible business. But for example, I don't know if that's management, right? So what if management leaves tomorrow and then leaves behind this company and the next management ruins the company, right? So those are just some preliminary thoughts to just think about. That's kind of how I structure my portfolio. I try to think, can this be replicated? And if it can, how much success is that replica going to have, right? And so we have other companies like Razer. There's a bunch of other companies that do what Corsair does. And we talked about how Corsair basically outsources all the production except for a couple components, and then they slap their logo on it. So where's the moat outside of the brand? That's just that's something that I need to know more about. It's not like something like Coca-Cola, for example. Coca-Cola, not saying it's a good investment, but Coca-Cola is one of those S-tier brands, S-tier company, and was in the past one of the greatest investments an individual could have made, one of Buffett's greatest investments. So those are some of the characteristics you can kind of look for that staying power. Now, you might be thinking that Corsair is the next Coca-Cola of video game components. I don't know, but like you'd have to make those justifications or at least I would have to make those justifications for me to say, oh, right now I can comfortably add a huge position without that huge margin of safety. That's what I'm going with that.
And let's kind of actually explore that just for the sake of the hypothetical and just kind of keeping it fun. Let's kind of explore that right now, Fabio. What could Corsair potentially do to structure themselves into a business where they have so much equity in their brand that it almost doesn't matter who's running the business? Because that's really what was so interesting, other than Coca-Cola being a great company. That was what was really so interesting to Warren Buffett, was the fact that the brand itself could uphold itself despite who might be managing at that specific moment in time. Correct me if I'm wrong.
Yeah.
What could Corsair do to basically get themselves into that same position, just for the sake of the hypothetical now?
You're comparing apples and oranges, because Coca-Cola has intellectual property. It has the formula for Coca-Cola that can't be replicated by a competitor. Corsair has components that are commoditized in some degree. So there's not really a way for them to do that yet, unless they figure something out, like a new device, and then they get patents on this device and they're the only ones who can make it, and the device is, in such high demand.
Incredible device.
Yeah, exactly. That's the way they do it. Like, for example, owning the platform is very good. So like Microsoft owning Xbox, well, that's a brand. That's a very powerful brand, Xbox. Sony owning PlayStation, right? Facebook, or now whatever they're called, I forget what they're called, but they just changed their name, and they have Oculus, right? So that's going to be probably a next gen platform. And then I know Microsoft, still using the Xbox brand, is probably going to get into that, and then Sony as well with PlayStation. So that's kind of one thing you can focus on. And yeah, that's kind of where I'm going with that.
Okay. Yeah, cool. So basically, to kind of revisit some of our assumptions in regards to Corsair, our sort of price targets for which we would feel comfortable buying in hasn't really exactly changed. And do you have any closing thoughts, Fabio, before we end the show here today? This is a short one, of course, but we just needed to cover a little bit of these concepts in regards to Corsair itself, because we've been getting a lot of questions about it. So we thought that we honestly would.
No, that's pretty much it. I think we covered everything.
All right. Perfect. Well, if you guys have enjoyed what you've seen here today, please be sure to like, comment, and subscribe. Visit our website at capitalmindset.org. We're your hosts, Austin and Fabio. Please share the video. It really, really helps out the channel a ton. We're your hosts, Austin and Fabio. We hope that you've enjoyed this episode of the Capital Mindset Show today. Take care.